Yeah, I think the banks are under threat, right? In general, we fintech space provides a lot of threat. I think if you ask the banks, then they don't take it as serious as they should, and I think that's quite natural if you're an incumbent and you've had basically a monopoly for hundreds of years. But I think we've seen a lot of new products and offerings that's coming out that are challenging the traditional way of thinking of banks. I think within the funding and financing for property market, we definitely see a change, and you actually have, you can say, even older institutions, so the pension funds in Denmark, they own a large amount of the real estate market in Denmark, and they have over the last 5-10 years actually, to some extent, made the banks less relevant. They do forward funding. So they actually go directly to the developer, funding the product, the projects, and then buying it at the end. And traditionally, the banks would do the middle funding, similar to what we're doing, the short-term funding. So you have pension funds they're saying, but why should we have the bank as an expensive middleman? We might as well do the projects ourselves. We have enough capital to do it, and we will be the ultimately owner anyway. So even within these two giant industries, you've seen a shift, and then you have all these other new alternative sources coming in. So I think, and probably a lot of bankers will tell me that I'm wrong, but I think that they should look at this with a little bit more caution, and probably also to get some inspiration about what's going on.
So thank you, Jesper, for coming here. Tell us a little bit about who are you and what do you do?
Thank you. It's a pleasure being here. My name is Jesper. I'm the managing director of Kameo Denmark. Kameo Denmark is one of the largest crowdfunding platforms in Scandinavia, and we're basically on a mission to democratize investment and opportunities for raising capital.
And what do you do?
So I run the Danish office of the Scandinavian company, doing the day-to-day operations, setting the strategy, executing it, building on the team, and making sure that we can provide our investors with a good opportunity and companies with adequate access to capital.
Great. So tell us a little bit more about what does Kameo do? What kind of problems does it solve for customers?
Yeah, so Kameo is basically a platform. It's a two-sided platform where we have on one side investors and the other one companies looking for capital. Basically what we're trying to solve today is this funding gap that exists in the market. Whereas if you are a company that is well consolidated, you also have access to capital in the traditional financial market. But many companies, especially small and medium-sized enterprises, they don't really have the capital needed. So they need to find an alternative solution. The platform we have provides that solution in the sense that if you're a company looking for capital, primarily within real estate and property market is where we operate, you are heavily capitalized on you have heavy requirements from banks in order to get the loan. So we can provide that, basically saying that if you need a short-term funding until you can fit in with the box thinking of traditional market, you can get that from the investors on the platform.
Jesper, tell us a little bit more about who are your customers?
Yeah, so the customers we have is quite diverse. Today we have about 35,000 investors across Scandinavia. They're basically from students, elderly people, whatever, investing from 50 euros, 100 euros and upwards to semi-professional, professional investors doing, $1 million or 2 million in a loan. But we also have kind of a group that sees the investment product that we're providing as a way of kind of engaging not only with us, but also the projects in itself. So we have investors that have invested 50 euros in a student housing project, and then they drive by and they call us up and they say, this is fantastic, I've seen the windows coming in, or the grass looks perfect and we can't wait for students to move in, and things like that. And that kind of impact that the investment provides people in a, you can say, in a market that was also reserved for the few. You needed to have quite a lot of capital to invest in real estate projects. Typically it would be 100,000 euros. Now you can do it from 50 euros or 200 euros or whatever. That purpose and that impact that brings, that people get from investing here, I think that's really interesting. And that's kind of to the core of of what we're trying to do, democratizing this opportunity and kind of leveling the playing field, right? Making sure that you and I can get the same opportunities of creating wealth as someone else can. So I think that's quite funny when now and then I get a phone call from a very enthusiastic investor that has done 100 euros or 500 euros or something, and they call us up and say, great job, I'm really happy with my monthly interest rate I'm getting into my Kameo account. So that's cool.
Right. So what is the main difference between investing in real estate projects compared to investing in private equity, in venture capital?
Yeah, it's a good question. I mean, I think kind of on a broad term, there's entry barriers. That's a big difference. If we look at our platform today and similar platforms across Europe, the entry barriers has been dramatically reduced. This is part of why we call it democratizing investing and financing. You can start from 50 euros, 100 euros, 200 euros, depending on the platform. Whereas if you're in the VC or the private equity, typically it's reserved for the few. So you need to have, you need to be a family office or hedge fund, or you need to have certain capital in order to be invited into this exclusive forum. And you don't need to do that. At the same time, if you're talking about investing in classic property, that's also a heavy capital requirement. Buying a house as a private person, or buying properties if you are a small company looking to rent it out for tenants. So it requires a lot of capital to get started. And what we're trying to do is provide people the opportunity to enter the market, be part of the wealth creation, and then build their fortune, their wealth from there.
Yeah. So if a customer were to tell you, who are you? Who is Kameo? What would they tell you?
Our customers would tell? That's a good question. Hopefully they will tell us that we are a transparent company offering the opportunity to fit your risk reward as an investor. So if you are looking for reduced risk in the property market, we have projects that fit that need. If you're looking for higher return and thus typically higher risk, you can also find that on our platform. But all of it you will find in a very transparent, open and honest way. And I think this is what we are trying to bring into challenging the existing markets, is a more open approach to investing, to financing. So it's not a black box. You invest in a fund, you never know what's inside the fund, and thus you don't know whether it's you can say performing according to what you should in the market.
Right. So let's get back on the different customers that you currently have. Can you explain a little bit more about the differences between equity-based crowdfunding and loan-based crowdfunding?
Yeah, so crowdfunding as a topic is obviously something that's been around for a long time. It's not something that we invented or platform existing today. The concept of amount of people going together funding something in some sort of financial structure has been known for many, many years. There exist also two other types of crowdfunding. Probably that's what people most know, which is donations. If you like a project, you donate something without getting something in return. There's reward crowdfunding, which is basically you as a company need capital, and in return of that capital you offer a product, a prototype, or access to some unique form for the company. And then we have loan-based, which is what we do at Kameo, which is very similar to having a bank loan. That basically means that there's a duration on the loan, there's typically a fixed interest rate, there's interest payment, there's repayment of the principal, either annualized or in full at the end of the loan. So that's a very classic financial product. The equity-based is basically you selling a small stake in your company and you're getting capital in return of that. And this is probably what you can compare most to VC private equity, but instead of it being, again, an exclusive forum, you can use crowd equity as a way of getting a lot more investors, thus also many more ambassadors, and you can get investors coming into your owning a small stake of your company for a very limited amount of capital. So this is quite an interesting new product. It is not very widespread in Denmark and the Nordics in general. It's a little bit due to the legal regulations, but we do have a new EU license coming up with all that entails. But it actually means that the prospect of promoting this as a way of startups or scale-ups or small, medium-sized companies can raise capital by selling a small share. That's an opportunity that's coming a lot more in the next couple of years.
Right. So how would you compare yourself to a bank? Are you a bank? Or what's the biggest difference?
No, we're not a bank, but we like to challenge the bank. When we operate, you can say a crowd lending business, we operate two sides, and that means we have a responsibility to provide a fair and transparent contract between the two parties. On one side, we need to nurture the investors and provide investment opportunities for them that's priced fairly and transparent. And at the same time, we need to be able to be competitive in offering the financing to the companies. So the main difference for us, if we compare ourselves to banks, is that we're not under the same regulations as a bank is. So if a bank lends out money, it has to put a certain amount of money on the side to cover potential losses. We don't do that because we simply facilitate the flow of capital. And that means we're also able to be a little bit more flexible in how we want to provide the capital and the risk we can take. So if we are providing capital for a company and we have investors that are willing to take that risk-reward ratio, then we're able to provide a loan or a capital structure that is different from a bank. And that may fit that company much more than, you can say, the traditional thinking. And it may fit those investors looking to take a higher risk than they would on a high-yield bond or similar. And that flexibility is why we're able to challenge banks in the current market.
Great, thank you. So let's talk about launching a product that is definitely new to a lot of people. How did you go about that?
Yeah, it's a good question. So we launched in Sweden in 2016, but we launched in Denmark in 2019. So I joined Kameo in 2019, and we had a typical year, and then we had COVID for a couple of years, and now we have another market uncertainty. So it's definitely been some interesting times. So if we, let's say we take that aside, these hopefully are very unique times, and then focus on kind of what was the challenges for us, and that was basically, the first one was awareness. As you say, we're bringing in a product that the concept may have existed, but it has not been widespread to the broader population, and we are trying to get the broader population into our platform, into our concept, into our understanding. So that was definitely a big challenge, creating awareness around that. Then it was also, you can say, when you have a two-sided platform, so we have companies looking for capital, investors looking for opportunities, balancing those two in the right mix was quite challenging. If we had too many projects on the platform, they didn't get funded. Investors then had an idea, why are they not getting funded? Is there something wrong with the project? Instead, it was the critical mass of investors at different times throughout the growth journey just didn't match. So we figured out that having a little bit overflow of investors is actually better, because then the projects get funded. That's the most important thing. And then unfortunately not all investors get in on every project they want. It's a first come first served basis. So when we launch a project that needs funding, then you have to be quick. And then I think finally it was like proving to people that the concept and the business model actually works, that we can not only lend out money or facilitate the lending of money, but we can also get the money back. So projects get finished, companies repay their loans, and that takes time. So it's a growth journey where I think almost every year we're doubling the loan volumes, we're doubling the profit or the revenue we're doing, and that simply takes time. But yeah.
And how did you go about with the first challenges that you mentioned? So creating awareness, and also how did the COVID situation impact this situation?
So we joined Copenhagen FinTech Lab actually as the first base. We since moved out, needing a little bit more space, but they were quite helpful in also helping us build a little bit on the awareness. then we figured out there was quite a lot of communities around different social media platforms. We had some people that actually are very enthusiastic crowd lenders, so there's an entire network and community around that. Eventually we saw people creating a Kameo community, which obviously we don't have access to, but that was quite motivating for us to see that people were talking so enthusiastic about our product and what we're doing, both I guess good and bad things of what we're doing. But we did a lot of different things, a lot of trial and error. So we spent a lot of time, effort trying to get out and finding a situation like this. We can tell our story and get invited into. So the classic grind journey of getting awareness, I think. Yeah.
True. So what is your biggest competitor?
Today, I think we still see the biggest competitor being the traditional market, right? And then next to that, we see a huge influx of capital in the market, and that comes from various sources. It comes from different funds. It comes from in Denmark a lot of pension funds. But we've also seen kind of a movement where the lender market, the traditional lender market, is shifting a little bit. Banks only now do about 50% of the global lending market, and that means that another 50% is coming from alternatives. Obviously, it's not just us, but there's a lot of alternatives out there. So I think when we look at the property market, definitely the banks is the biggest competitors, but we see a lot of similar structures like we have, or we see private investment firms or private people, even wealth people, that go in and say, well, this is actually quite a lucrative business if we know what we're doing. So there's a lot of capital, and it's definitely not a white space everywhere. It's quite a red ocean when it comes to providing capital, definitely.
And is that in the Scandinavian market, or is that globally?
For us, we primarily look at the Scandinavian market because we operate in Denmark, Sweden, and Norway. But I think that the trend is definitely global. We see a lot of alternative financing in UK. UK is much further ahead on this journey. Same with Germany. So we look a lot to those countries to see can we somehow take a little bit of their journey and the way the market is developing, and then can we time that right once you have the industry following along, once you have regulation following along, and so forth. So we definitely look for that. But I think that we see a lot of movement in the alternative finance space globally also.
So let's look at the money creation process. The general knowledge brings us to understand that the bank brings money into existence and it issues loans, right? And many of them, or some of them, are for real estates. Now, what happens when these loans are no longer required by the banks, but it's coming from an external company, right? Is that a threat to the bank?
Yeah, I think the banks are under threat, right? In general, fintech space provides a lot of threat. I think if you ask the banks, then they don't take it as serious as they should, and I think that's quite natural if you're an incumbent and if you've had basically a monopoly for hundreds of years. But I think we've seen a lot of new products and offerings that's coming out that are challenging the traditional way of thinking of banks. I think within the funding and financing for property market, we definitely see a change, and you actually have, you can say, even older institutions. So the pension funds in Denmark, they own a large amount of the real estate market in Denmark, and they have over the last 5-10 years actually, to some extent, made the banks less relevant. They do forward funding, so they actually go directly to the developer, funding the projects, and then buying it at the end. And traditionally, the banks would do the middle funding, similar to what we're doing, the short-term funding. So you have pension funds they're saying, but why should we have the bank as an expensive middleman? We might as well do the projects ourselves. We have enough capital to do it, and we will be the ultimately owner anyway. So even within these two giant industries, you've seen a shift, and then you have all these other new alternative sources coming in. So I think, and probably a lot of bankers will tell me that I'm wrong, but I think that they should look at this with a little bit more caution, and probably also to see get some inspiration about what's going on. We're servicing needs for some people that the traditional market are not servicing. Why is that, right?
Do you see any other opportunities for democratizing wealth management?
Yeah, I think wealth management it's an interesting topic in a way, right? It's in my opinion, it's kind of reserved for the few, and what we do and what is in my core is providing equal opportunities for investment. That's what we were founded Kameo on. That's what we're working for every day. So I think the concept of this like exclusive club that are providing unique investment opportunities, I think that exists to a large extent, but I think and hopefully we will see a shift in that. I myself get a couple of emails every month about, you know, pre-IPO investment or seed investings and stuff like that. You have a lot of networks, you have business angel network, you have different institutions in Denmark that are trying to do this early stage funding. And I think that aspect of wealth management, I think also has to somehow be changed, reinvented in a way. And I think that crowd equity is a good way, that could actually be something that could kind of lower the barriers and not have just a few investors trying to keep the valuation down, so that later on they harvest a lot of the money, but actually doing it a little bit more fair and transparent. So I think that should change, and I hope it will also.
Do you see this going mainstream in 5 years' time?
Kind of the democratization of finance?
Yes.
I think we've already seen it. I think that Denmark, unfortunately, is a little bit behind the curve, but we're seeing it massively in Sweden, Norway, and the rest of Europe. So I think it's just the snowball is already rolling. We will see this coming really, really heavy in the coming years, absolutely.
Great. Thank you a lot for all this inspiration and great talks. Thank you for coming.
Thank you for having me.